Hello and welcome to SIBO Volatility 411. My name is Dan Deming and I'm with KKM Financial. Well, SPX is down for a second day today and the VIX cash is pushing towards the high end of the range for the week, 21.40 here midday. And it is interesting as we see the selling pressure persist for a second day. There's a couple things in the dynamics of the vol structure that are unique given the fact we're seeing the cash level pushing up towards the top end of the range. But you look at realized volatility, 30-day realized volatility actually is ticked down week over week from 18.6 to 16.4. So we've experienced a better than 2% drop in realized volatility. However, with the selling pressure and the SPX pushing down towards the low end of the range for the year, that's a reason I think why we're seeing implied levels continue to hold elevated relative to realized levels. And also pointing out the at-the-money straddle in the SPX is ticked up week over week as well from 15.6 to 17.3 currently. So we're seeing a nice increase there as demand continues to hold firm in the SPX at-the-money options. SIBO SKEW index is actually at the low end of the range for the last 6 months here at 133. So we're seeing again the demand for the way out of the money puts decreasing relative to the demand of the at-the-money options in the SPX. Looking at the VIX futures, expiration next week. Now remember, we have a holiday on Monday, so it's going to be a short cycle leading into expiration on Wednesday. And currently, that front month future is tracking the cash pretty much at parity. So we're looking at that front month future hovering around 2140 with the cash at 2140. And the futures market as a whole, though, still maintaining a contango here at these elevated levels, and that roll market between February and March is still priced at a $1.20 premium. VVIX, measure of implied volatility in the VIX options, 126. Now that's pushing up towards the top end of the range for the last 3 weeks, so we are seeing demand for VIX options picking up here, heading into expiration week, and we look at the activity at the money calls and puts really in the 20, 21, and 22 lines, very active in January options. February options, we're seeing 18 put line trading 10,000 contracts and some out of the money Feb call spreads going up today as well. Looking at next week, we have several things to focus on. Certainly the holiday on Monday, VIX expiration on Wednesday. We have earnings kicking off full steam next week, so that's going to be a driver of vol, as well as some data points around housing and Fed speak.